what's the meaning of good investors now? Famous good investors. Okay. Well, can you all name me a few? Like who are the good investors? WB. Okay, Peter Lynch. Peter Lynn.
LYNCH, yeah, Lynch.
You
Peter Lynn is another
Adam
another.
Khoo. Okay. Cathy Wood. Oh, interesting.
Wow, Diho
okay,
say
so depends
you
on
and me. Wow, very touched.
okay, so again later we talk about audited results now, because we can claim a lot of things, but in the end, let's talk about results that's audited and also passes through time, and also I would say market ups and downs. Warren Buffett himself said a few things. He said that for him, right, a 1 year record, a 2 years record, 3 years record is actually very little. Okay, so he said that he'd rather look at least 5 years and above. So make sure when we talk about good investors, at least minimally 5 years. If you ask me, preferably even 20 years, so that there is I would say, go through a few market cycle. Okay. Yep. Now, so market right now, right? Maybe I just share a view. Okay. I like to share screen. So let me share a screen now. So you can see, right now, just look at this perspective. Now, that time during COVID, right? This is Amazon, and it represents quite a lot of the big companies, even like I would say quite a few, quite a few. Okay, Amazon, or even like those tech stocks, or even Zoom and things like that. You know, in 2020, right here, a lot of people feel that it's cheap. How many of you agree that in 2020, when the market dropped during COVID, it is considerably cheap? If you all agree, can you all please type C? Okay. Now, at that point in time, right, wow, some people say Bill Ackman. Some of you know your stuff. Charlie Munger, excellent. Temasek, then ha. Okay, you know your stuff. So sorry. Okay, so you can see a lot of people think that during that point in time it's cheap, right? So a lot of people buy and then it went up. There's like a V-shaped recovery, which I guess a lot of investors actually guess, and it really went up. So now the thing is, right now, right, it is actually almost near the point in 2020, correct? It's almost 2 years ago, no? It went back, not exactly, but near, near the point of 2020, right? Which is at the point in time. But let me show you something super amazing. Now, you can see in 2020, this is the revenue of Amazon, and this is the revenue of Amazon right now. So it went up by almost 100 over billion. The revenue increased by 100 billion, but it's the same price. I want you to think about that. In fact, a lot of the companies that you all see has dropped right now, right? Their revenue has increased over these past 2-3 years. Of course, the question is, can it sustain? Can it continue? And for the next, not just 1 year, 2 years, but the next 5 years, 10 years. But take that perspective into perspective. And I think that you will be able to see that at that point in time, it is a lot more uncertain than now, in fact, because a huge new wave of a pandemic actually hit the whole entire global situation. And personally, if you ask me whether is it cheap back then, right, I think that it is okay, but I'm very uncertain because I don't know how the world will react. But now, don't you all agree it's a lot more, I would say, manageable? We know how to manage. I'm not saying that we don't know whether got recession and stuff like that, but a lot of us know how to actually manage through the pandemic. And I can tell you this revenue and things like that probably will be a lot more predictable. So think about it that way, okay? Anything you want to add, Pete?
I think the key thing is that when people look at currently the crisis go down, right? On hindsight, a lot of times people will say, wow, I wish that I go back to COVID times. But now is the proof of the pudding. When the prices are really going back to pre-COVID times or even during COVID time, that is when you really need to ask yourself, hey, am I going to take action or not? Or am I going to be paralyzed in fear? And I think that's something that good investors can do, is to overcome the mindset. It's really not so much about the strategy. One thing I think Sean always mentioned, right, is actually the secret to good investing is not the methods. It's the person doing it. It's the ability to say, hey, when the whole market is very scary, everyone's dumping, right? Are you able to be very cool as cucumber, like they call it, right? To go into the market and then start buying.
Oh yeah. So what are you guys doing now? Are you guys starting to buy or are you still waiting? What is the go all in? Okay, Jessica. Actually, go all in into which one? Not Amazon, right? Hey, sorry, if I'm laggy, let me know. Then I will see how I can adjust.
Yeah, okay.
It's okay so far. DCA, okay, good. So these are very good examples. So now maybe I just share with you guys one particular thing that we have in mind. And I want to start by sharing with you guys this very interesting gentleman called Stuart Hoish. Okay, so let me show you his picture.
Sean, you share the screen? Yeah.
Yeah, I haven't shared. Okay, hang on. So this is the guy's face. Okay, his name is called Stuart Hoyish. Anybody knows who he is? Anybody recognize this guy?
Even I also don't know.
Oh yeah, if he don't know means a lot of people don't know lah. Okay, anybody knows who is he? Nobody knows, right? Okay, his name is called Stuart Hoyish. Okay, and by the way, this guy is a billionaire. This guy is a billionaire. Now, actually, this guy, after I read about this guy, right, it makes me really think about the possibility of like, what is the kind of wealth you want to create in this lifetime? How many of you, right? How many of you, right? You don't mind having a chance of becoming a billionaire in this lifetime? If you don't mind, can you type B, billionaire, B for billionaire, okay? So now let me share with you, right, who is this guy and how he made his billions. This guy is very interesting. So he's an investor with an estimated current net worth of 2.5 billion. Okay, 2.5 billion, right? Is 1 billion is actually 1,000 million. There's a lot, you know. Okay, so what happened is this. He actually what happened, right, is he actually ran into major challenges in 1980s. Okay, this time frame was very significant to me now because it's a range of years which I was born. I was born in 1981, so I know that it's about 40 years ago. Okay, so what happened, right? He took over the company. He ran into major challenges. He actually lost a lot of money. So at 1980s, right, something happened to him. He was very down. His business is closing down. So he did not come from like a rich family or have a lot of money. But what he did was in 1980s, right, something happened. Okay, so 40 years ago, okay, you see his business went south and then he think like he's going to die already. I mean, in terms of his finances. So during this period, he read this book called The Money Masters, written by John Train. So the book actually talk about like very successful investors like John Templeton, Benjamin Graham, but that's where he also found this guy called Warren Buffett 40 years ago. And then he actually bought 40 Berkshire Hathaway A shares, not B shares.
Wow.
Okay. A shares. That time was $265. And then he invested $10,600. Okay, guys. Okay, so let me show you what happened now. First of all, in case you all don't know, Berkshire Hathaway, what time? Sorry, what price did I mention he bought? 265, correct? That one was 40 years ago. Now every single share he hold is $418,000. Okay, every single share he hold. And the cool thing is he actually held on to it. Now, some people maybe he bought at 200, you reach maybe 500, you sell already. How many of you are guilty of that? If you buy something at 200, it reach 500, you feel tempted to sell. If you are like that, please type me. Please type me. Be honest about it. So I want to tell you how real billionaires are being made. So if you want to become millionaires, billionaires, okay, I'm not a billionaire yet, by the way. So I just want to be upfront about that. But it makes me like remind myself of a lot of key fundamentals. Now, so how much did he invest in? Do you remember? He invested in 10,000 USD. Okay, correct. He mentioned 10,000, right? 10,600. Okay, so around 10,000, which is about 14,000 Singapore dollars. This 14,000 Singapore dollars, okay, equivalent today, because we bring it today's value, 14,000 Singapore dollars is actually about 50,000 today. So he invested $50,000. This $50,000 after 40 years became $2.5 billion. He only made one right choice, and then he became very, very wealthy. Okay, so now I just want to share with you guys this. Okay, like over the years, I want to share that the reason why we are so excited to talk to you about managing the money is we are actually aiming to replicate such successes as Stuart Horace. Okay, for you, for people who actually wants to invest. We do not claim to be the next Warren Buffett. I want to tell you that Warren Buffett is really the top of the cream. He's really amazing. Okay, we can never say that claim to be like him, but I want to share that his principles and things like that, right, can be replicated. So I want to share with you exactly how Warren Buffett actually invests. Okay, not exactly, but the philosophy, the key idea behind it. Because guys, later I will share with you and I'll prove to you, right, the Buffett method, value investing method, right, it has been proven over years, over and over again, and it is the only few key methods that stand through the test of time. So I know just now you mentioned Cathy Woods. I mean, she's doing very well. Her results for the past 5 years is about, if I'm not wrong, it's about 19% or like 18% per year right now, which is actually Warren Buffett's record for the past 60 years. Okay, whatever Cathy Wood can do in the past 5 years, Warren Buffett has done it consistently for 60 years now. So this is something I want to actually encourage you all to look at it. Now, how many of you are excited to actually like really grow your money the Buffett way? If you're excited, help me type B. Okay, I'm not the Singapore Buffett. I don't think we dare to claim these things. Now I'm going to actually hand it over to Pete, right, to give you an example of how to look at stocks like the Buffett way. We look at them as like a business. So Pete, I'll hand this portion to you.
Okay, all right. Thanks, Sean. All right, so guys, I'm just gonna share like how I look at investing, and I'm gonna show you a exact case study that I think also Sean hear me talk about this company a couple of times in the past. But I'm not sure how many of you have heard of it before. Okay, so let me just share my screen right now. Okay. All right. Okay, but got some bureaucracy to go through. Okay, right? Because now I'm a fund manager, so there are some things that I need to do. Okay, so guys, can you all see my beautiful face on the screen? Okay, if you can, type in yes. All right. Okay, so for those of you who, because this is actually Sean's event. Thanks, Sean, for bringing me on. For those of you who don't know me, my name is Pete. I'm a portfolio manager at Phillip Capital, and I think most of y'all would know me from back in the days when we were running BOS, and right now we are running OMI, right? Options Millionaire Intensive. So that is something that I'm very passionate about. But really, my full-time work is here, which is actually at Phillip Capital, being the portfolio manager. Okay, all right. So just some quick disclaimer is that I want to share with y'all as much as I can. So later on, we're going to go no host bar. Just ask any question you all want. I want to really add as much value as I can. But to do that, I want you to all take all this into education purposes, not investment advice. Okay, so everything that you do is must be your own decision. Okay, I always say that no matter you invest with us or you don't invest with us, or you invest your own money, right, or you put with other people, it's always your own decision. Okay, all right. So just come quick background. I'm a full-time investor now, but I've been investing for about 14 years. I went through 2 crises. 2008 and also 2020. I think I'm one of the very few that can experience 2 crises in 14 years. Right? That's crazy. Because usually they say major crises only happen once every 10 years. And I already had 2 already. Okay, so a lot of times I say I fast forward my investing career. And the good news is that when I go through such crises, then I can help a lot of students along the way to share them investment strategies and how to analyze business. And I'm also very passionate about teaching the young, right, the uni students who are actually not too old, they still got a long runway, but they're young enough to understand what investing is. Okay. And last but not least, partnering Phillip Capital as the portfolio manager. Okay. All right. So the next slide, I want to go into the exact way I look at investing. And I think many of you asked me, hey Pete, previously you were doing the barbell strategy. Now you're talking about value investing. Are they different? Okay. Hey guys, make a guess. Is barbell investing and value investing different or not? For those of you who heard my previous presentation on barbell, do you think they are actually different or actually they are related? Okay, if you think they are different, type in A. If you think they are related, type in B. All right, A or B. Do you think they're different or related? Okay, A or B. Yeah. So actually, right, they are related because remember, barbell has 2 parts. One is, of course, you're going for the growth part, which doesn't have much relation to value. But the part where we're looking at strong cash flow generating businesses, recession-proof businesses, okay, is actually based on the fundamentals of value investing. Okay, so I want to share with you all my exact methods on how I do value investing. Now, I think not everyone will be ready to invest in the way I invest. Later, you will find out why, right? But I want you all to use this as a way to improve your own investment journey. Okay, how many of you all have heard of value investing? Type in me. How many of you all have heard of value investing? Type in me. Okay, so I want to share with you what does value investing mean, because it's a very big word. A lot of times when you go out there and say value investing, everybody are, oh, Warren Buffett. But what exactly does it mean? Okay, it can be very different from people to people, right? So I start with this picture first. Okay, so make it fun. I want to tell you all a story. Okay, so quickly, look at this picture over here, like all mud, all soil. Hey guys, what do you all think this is? What do you think these few things in the middle is? What are they? Make a guess. Martin say poop. Diamond. Wow. Hey, diamond don't exist in the soil. By the way, diamond exists in rocks. Okay. So yes, some of y'all got it right. This is actually truffles, right? This is actually truffles when you first find it in the ground, right? They are very unappealing. They are very hard to find, but when you find them, right, they still look like that, very unappealing. It is only when you break it up and then you get that familiar smell of truffle, right? How many of y'all right now, I say truffle, you can have that smell in your mind already, right? Wow, you can literally have it in your mind already, right? That's exactly how I like to invest, is to look for overlooked areas. And most of the time, to be very frank, right, out of the 10 stocks or 10 companies I look into, right, I would say 9 out of 10 is basically pure dirt. They are not truffle. But once in a while, like what Sean mentioned previously, right? This guy, you will find a truffle. You will find a Berkshire Hathaway. That boring piece of dirt will turn out to be your best truffle ever. Okay, so I want to share with you all the journey of how I look at so-called businesses, like using the truffle method. Okay, so guys, right now I will share with you a description of a business. I won't tell you the business name yet, so later I'll ask you to guess also. All right, so I'll tell you the business description. I want you to think for yourself in a value investing way, right? Will you look at this company? Okay, so first one is, this is a spare parts business. Very unsexy one, it's just spare parts. Okay, right? Not very scalable one. The addressable market is very known. It's a brick and mortar business, right? They are not very much online. In fact, they are just about starting to go online. Can you imagine after COVID, this company just starting to go online. They are nuts, Okay. And when you look at revenue growth, it's growing at about single-digit growth every year. So it's not your high growth, fast growth company. So it's belong to the other side of the barbell spectrum. All right. And first and foremost, this is a negative earnings, retained earnings company. Just now when I was telling Sean, actually this company has negative retained earnings, he was like, wow, sure die on. Right? Because this is like the secret thing to a lot of investors. But later on you will see why it's actually slightly different. Okay, and last but not least, significant debt level. Okay, so this is on the surface what you will see if you just go and use screeners to find. Now, guys, what do you think? Is this a business that you invest in or not? Just type in yes or no, based on what you see on the surface. Okay, based on what you see on the surface. All right. So I think many of you all type in no, right? Yeah, Gurmit or Paul say run away. Wei Jie say no. Victor say yes, right? Jeffrey also say no. Tim says no. Steve, I think most of you all say no, right? Now, this is where I want to help you all to adjust your mindset. Is that on the surface, if something looks not so attractive, don't just straight away say no or yes, right? Your correct response should be, I don't know, right? When you see that piece of dirt on the ground, don't straight away dismiss it and say that's not truffle, right? And of course, don't straight away pick it up and start eating it as though it's truffle. The first thing you want to do is actually peel open behind the soil and see what it is. See whether it's there the familiar truffle smell, okay? So when you peel open this business like a truffle, what you will see is that firstly you'll notice this is a very high operating margin business, right? So their gross margin is at about 50% and is very consistent. This is year over year, by the way. I forgot to put the year here, but this is trailing 12 months. This is 2022. Then this is what, 21, 20. So this is like 21, 20, 19, 18, 17. Okay, very, very good gross margin. Even operating margin is 20%. That means their operating profit for every like $1 million is 200K, which is very healthy. Okay. On top of that, it's a very cash-rich business. Look at this cash flow from operations. So this is something that all of you from OMI will know, right? We look at this very carefully. You can see that the cash flow since 2016, where it's 1.6 billion, almost double in 2022. Double, 100%. Okay. And if you go to the stricter side of the business, free cash flow. What is free cash flow? Free cash flow is cash flow from operation, then you minus some more. You minus away all the other debt already. Okay. It's actually 1.1 billion back in 2016, and now it's at 2.6 billion. So more than double of free cash flow. Right? Very, very healthy business. But so there's a but here. I put but what? This is a business that a lot of people LTM is last 12 months. Yes, last 12 months. Okay. Now, this is where a lot of investors, when they first saw this business, right, they look at equity, right? Because traditional value investing is look at equity, see whether this is a good equity business, right? And and they straight away got put off because this is a negative equity business all the way. That means the company never keep any money, In fact, they are sort of like in debt in a certain way, right? That's why I say they got significant debt. Now, the question is, where did the money go? Cannot be they just keep spending money non-stop, right? So where did the money go, right? Guys, I want you to at this point, make a guess. This is a high margin business, okay? High margin business, but they don't really have place to expand already because it's a brick and mortar business. The market is very saturated already, okay? But high margin, cash flow very rich. Now, where do you think they use the money? Where did the money go? What did they do with the money? Okay, so Steve say R&D. Okay, guys, if a company R&D until the equity goes to negative, please, like what some of you all say just now, like what Paul said just now, run away. They are throwing money into the abyss. Okay, so Martin said dividend, maybe possible, they might give dividend. All right. So Cecilia said dividend, yeah. So the most common one is people say dividend. Okay, but actually this company, what they did was, Wei Jie say reinvest into employee. Wow, Wei Jie, you're the best boss ever. Okay, right? But the correct answer is they are aggressively buying back shares. Okay, aggressively buying back shares. So these days you heard of all the companies out there doing stock split, right? They are doing the reverse. They are not just doing stock recombination. They are removing shares from the market, right? They call it stock buyback. For those of you who recognize another term, right? So you can see this company in 2016. They had 30 million worth of shares, 30 million. Okay. And as of this year, 2022, it's only 21 million. They bought back close to 30% of their shares in just last 5 years. Okay, 30%. That means, what does it mean? That means even if they don't increase their earnings, the earnings stay stable, the operating income don't grow, just by them buying 30% of shares, your share price should increase by 30%, because now the pie, right, the number of slices that you cut in the pie is lesser already. It's the opposite effect of the stock split, right? Stock split reduce share price, this one increase the share price. Okay, so this is what Charlie Munger always say that he loves a lot, right? In one of his famous lecture that he gave to, I think it's Harvard Business School, right? He said, pay attention to the cannibals. What is cannibals? Cannibals basically are companies that are kind of eating themselves away. What does it mean? That means it's buying their own shares off the market to enrich the shareholders. So Charlie Munger loved this kind of company. Okay, all right. So this is a cannibal company. Now, on top of being a cannibal, right? Just now, I think Sean also mentioned that look for businesses that can, withstand the test of time, regardless whether is it COVID or whether is it recession or is it good times, right? So this company seems to have recession to be its benefit. Why? Because in the CEO statement this quarter, right? So this is something that I always pay attention to. Like, look at what the CEO is saying. Okay, so he said over the last 30 years, there has been 4 significant shock to the economy, right? And he said in all those 4 shocks, our performance had meaningfully stepped up. Okay, during the recession, pandemic, our business has gone up and it has never stepped back. I'm like, wow, this is a very, very few companies out there that are saying this, because most of the company out there, they are using pandemic as what? They are not saying pandemic help them, no. They are saying pandemic, is the reason why our earnings drop, right? Excuses, right? They're saying, that's why our revenue drop and stuff like that. Okay, so what company do you think this is? Okay, make a guess. Everybody make a guess. Which company that is high operating margin, rich cash flow, and aggressively buying shares, and seems like pandemic is their savior instead of their devil one? Okay, so Wei Jie say healthcare. Ramasamy say antidepressant, alcohol, mental health company. Wow, very serious. Okay, so some of you say Amazon. Jessica say I don't know. Jessica, you say I don't know like 3 times already. Okay. Alpha say Berkshire, consumer staples. Some say Apple. Some of you say hardware shop, vaccination company. Oh, that sounds good. That sounds possible. Okay, so I give you a clue. What if I say it's a car company? What do you think of immediately when I say car company these days? When I say car company, which company comes to mind immediately? Without thinking one, put it in. Okay? Without thinking, okay? Yeah, you see most of y'all will type in either Tesla, or maybe some of you type in BYD, which is like in China, or maybe you are the old school like me, you will type in Ford, GM, and all these, right? But the key thing is, it is neither of all these businesses, right? Because guys, one thing I want to share with you is this. If everyone is looking at the company, right? If it's so obvious already, right? Very likely the opportunity will not be there already. Okay, I say again, if the company is very, very well discussed, every YouTuber out there is talking about it, it's very unlikely you will make a lot of profit out of it. Why? Because there's no competitive edge. There's no information edge already. Okay? Yeah, I think some of y'all got it already, right? The answer is AZ. AZO. For those of you who don't know, AZO stands for AutoZone. Okay, so what is this company? This is a car spare parts company, right? You can go there and buy a reverse mirror, side mirror, tires, car cleaning equipment. And guess what? Why are they so supported by pandemic, right? It's because during pandemic, do people buy car or do people maintain the car? Their existing car, right? Their existing car. They, of course, more people will want to maintain their current car and allow it to grow longer if they want. So in fact, the level of people doing DIY, maintaining their own car in their own garage, which is a very big thing in the US, spiked up during COVID and even during the recession times like now, because people are less willing to buy new car. They are also less willing to go to the garage and pay people, the car repair shop to pay people to do it. So they DIY, Okay, I think Sean said Singaporeans wouldn't understand this because Singaporeans just send everything to the workshop, right? So, but this is a company that really benefited because as everybody want to extend their lifespan, the car lifespan, they will spend more on maintenance. Okay, so this is great news for AutoZone. Now, another thing is when it's a great company, right? I want to share a bit about valuations because it's about looking at a company and deciding how much price to pay. Okay, how much price to pay. So one thing you will take note is that this is AutoZone's valuation. I use the valuation method of EV, which is enterprise value, divided by earnings before interest and tax, which is EBIT. Okay, so you can see that previously, right, the EV/EBIT has always been about 10 times, right? And when the pandemic happened and then this whole culture changed and everybody become more prudent with the spending on cars, you can see that the valuation expanded to hit the next level of about 14 to 15, I would say. Okay, so this is what I call value expansion. And this is really how why some people can buy a share of Berkshire at $265, right? And now the business can, one share increase to like 400K. That's how many percent increase? That's like a few 1,000% increase. The truth is this: did Berkshire as a business increase by a few 1,000%? The answer is actually no. It's not. If you go and look at Berkshire as a business, how much money they generate, it did not go so much more. Then how did the share price go so high? It's because of valuation expansion. It used to be about 10 times kind of valuation, but when the market realized it's a fantastic company, what does it do? The market pay up. The market pay a better premium. So in this case, for AutoZone, the increase in multiple is 40%, 40, from 10 times average to 14 times average, right? So this is how you can make money, even if, let's say, the company is a very slow, not growing much business, but just by them buying back their own shares, and because the business is so resilient, so strong, very cash flow rich, the valuation expand, okay? So at the end of the day, let's look at past return, right? Now, this is a company that if you invest in the last 5 years, you just close your eyes, don't look at it, you buy the shares, right? It will have grown at 33% compounded every year, right? The total return will be more than 300%. Okay, all right. Hey, how many of y'all think this is a fantastic value investing? Right? How many of y'all think this is a truffle? Type in truffle, okay? When I first found this company back in 2020, right, to me, I was like, wow, it's really a truffle. Yeah, it's like how you uncover truffle. Basically, go and dig the soil. Okay? Basically, go and read as much as you can, right? So this is, to me, it is quite interesting, quite valuable. And if you ask the students in the OMM mentorship, right, I told them about this business, I think in late 2020 and 2021. Right? I say, hey, this is something that you can look at. And this year, when I just do a quick check with some of them, they say, hey, Pete, but we never buy. Okay, now guys, I share with them even more in depth than what I just shared with you in the last 10 minutes, right? But can you guess why they never buy? Why they never invest? Why don't they take action? Even though the analysis is very convincing. Scared. Need a lot of patience. Okay lah, not really. I mean, it has been steadily going up. It's not a company that's very volatile also because it's quite a boring business, right? Some of them say, don't believe me. Could be true. But when I ask them for the reason, right, most of the time, the reason is this, right? I say, what's the issue here? And they will tell me, hey, Pete, the per share price is very high, right? Because back 2 years ago, the per share price was already $1,000 per share. And it was very hard for a lot of people to overcome the mindset that they are buying a 4-digit business. It's just like when I was telling people to buy, okay, I cannot say that. When I was telling people that Amazon was a great business, okay, in 2030, then they're like, but Pete, it was like $1,000+ per share, you know, right? So I always go back to this statement by Warren Buffett, and I hope that it will really help all of you, right, to overcome the difficulty of buying a 4-digit stock or even a 5-digit stock, right? Because guess what? It can become like Berkshire A share, become 6-digit, you know. All right. So Warren Buffett always say this, right? I think this is a statement that everybody knows, which is price is what you pay, value is what you get. Okay. So next time, whenever you see a 4-digit, 5-digit stock, right? Remember what Warren Buffett said. Don't be afraid of the share price. Instead, ask yourself, is it a good company? You know? Is it a truffle? Okay. Or Gabriel say, tonight go and buy. No, hey, guys, by the way, this is not recommendation. I just want to use an example to share with you. Okay. All right. So what's the objective we are trying to do here for me and Sean, right? Is that we want to build a basket of AutoZone. We want to find a basket of AutoZone. Now, will it be overnight that we can find so many AutoZone? I don't think so. But if we are persistent and we keep working on it, eventually we will find enough businesses to allow us to find a basket of discount company, right? But unfortunately, there isn't like a straightforward ETF to do this. Okay, there isn't a straightforward ETF to do this, and this is why I decided to talk to Sean and say, hey Sean, I'm running a fund. Can you join me as an advisor? Because I think I need more brain cells behind this. I need more processing power behind this. Because each time I want to find one truffle, right, I have to dig through like 99% of the dirt. Okay, so guys, I hope this is useful to you, and I really wish all of you the very best to find your AutoZone. Okay. Now, the good thing is this, there is not just one company, one AutoZone out there, right? There are many other AutoZone. I'm very, very certain, right? It's just up for us to go into the forest and look for your truffle. Okay? All right. Okay, so I just want to hand it back to Sean right now.
Okay, thanks, Pete. How many of you enjoy Pete's sharing? If you all did, can you all please share 1 or 2 things that you learned? Just share one thing that you learned from Pete. Because I think for us, okay, this sounds very funny. Even though we are running a fund, I mean, it is one of the business that we service that we actually provide, right? But if you're, I mean, I do hope that you guys also learn from it, and who knows, some of you can become your own portfolio manager, because I don't think we are sort of the best but we try to actually share our knowledge, and if you can become better than us, then you shouldn't ask us to manage your money for you because doesn't make sense frankly speaking your job as your wealth, for your family to build your wealth, right, is to allocate the money to the best place to grow your wealth. So if you think that seriously, if you think that you're on par with us, right, actually don't put money with us. You know why not? Because very simple, we still got management fee and things like that. So I just want to say this very openly.
Yes.
So
correct.
Of course, if you feel that there's a certain chance, maybe I'm still learning, or I need to park some money here and there, then you allocate accordingly. I realize even Warren Buffett and Charlie Munger, they even park money with Markel and also certain places where they feel that maybe they should spin off. It's quite interesting. So, okay, don't see the price, see the value. So I want to actually come back to the idea that why we actually ask get Pete to actually share this, right, is to show you the idea behind how to pick stocks. Because this Stuart Horish, right, he picked someone who picked stocks like that, which is Warren Buffett, and he became a billionaire from there. Now, the whole idea of Buffettology, let me share with you the key principles which Pete mentioned, and really even if you do decide to invest with us, for us to manage your money, right, we need you to understand what we are doing also, so that you don't sort of start to actually waver, have doubts and things like that. If you are someone who is going to put the money in, three months later, you see the thing fluctuate and become very scared, right? Later we got a surprise for you, okay? Okay, we are going to do it the Buffett way. So okay, the whole idea of building the whole entire portfolio so that you can make billionaires, right, or millionaires, is to choose good business. This is very subjective, but very simply, a good business is one that can continue to make money, right, and can make more and more money for us, right? So now we want to project it based on good business model and increasing demand. At the same time, very importantly, is backed by track records. Okay, so one thing that I've been trained by the Buffett family, right, which is Mary Buffett. Is it getting better behind? Okay, I think airplane flight past.
It's okay. It's okay.
It's okay. So one thing that I was actually trained by the Buffett family, right, is track records proves a lot of things. Because when we think that this company is very good, is what we think, and it's very subjective. So it's only when they show records, right, it is actually proof. So it is backed by financial results and ratios, which is what Pete has been showing, okay? And the next thing is it must be of good valuation. Now, for those who have came for my lessons before on investing and things like that, does this sound familiar? Good business, good price. If it sounds familiar, please type yes. Now, nothing has changed over the years, see. Nothing has changed. In fact, people who start, okay, I see the danger, right? It's like, there's the funny thing, because like, actually, I've been teaching this like since 10 over years ago. And the thing is, right, good business, good price is not that complicated, but people tend to complicate things. In fact, I see a lot of people can buy stocks at crazy valuation and they can try to convince me that it's at a good valuation. This is how weird people are in the stock market, even though that it is, I mean, to me, it's like, it's so obvious it's like expensive. How can you say until it's cheap? It's very funny. And in the same case, just now, the stock that actually Pete showed is like $2,000. But you look at the valuation, it is cheap. But how come people see that it's expensive? Because they actually mixed it up. It's very interesting. So there's this thing called margin of safety, very important. So every single stock that we select into the basket to grow your portfolio, right, must be of good business and must have good valuation. In other words, right, it must have very clear vantage point. It must like, when I buy this, the chance is very high. There's no guarantee. There's no such thing as confirmed guarantee investment. There isn't. But you see, when you enter, there must be all the pieces must be aligned. Okay. And the whole key assumption, right, is that in the short run, the stock market will give us opportunity. But in the long run, okay, it will show the true reflection of the business. This is the whole idea. Now, this particular matter, right, is what we commonly known as value investing. Good business, good price. And what is not very popular over sometimes. Sometimes people will start to actually make fun of it. But guys, let me share with you something. You know that I just want to actually prove to you that value investing over the years is still the best now, because this is the list of fund managers, okay? And these are fund managers that has filing on, meaning to say their results are audited, okay? So I've just actually arranged them from like 10 years results now. So you can see 10 years results, there's quite a number of them. Surprisingly, to some people may find it surprising, that Warren Buffett is here only. He's not the top. He's not the top. But can you guess why is Warren Buffett not the top? Can you make a guess? What is the disadvantage he has as compared to the rest that can make like 29% per year? Do you know what's that? Actually, we should call it truffle funds. Now people, the truffle sticks. Okay, yeah, the size. Actually, it's the size. So Warren Buffett, because his fund is very big, it is harder to deploy. Okay. Now, I mean, he's got $300 billion, right? It's very hard to actually find so many truffles, right? So if your fund size is, let's say, 1 billion, it's still relatively easier. 1 billion is not a lot, actually, by the way. Okay, so this is the way. Now, let me show you. So these are the top fund managers for the past 10 years. Later, we can go to even since inception, like maybe 20, 30 years. But let me show you something that is very, very common one. Let me just show you. I'm just going to show the top 3 or 4. You can see it is all, the philosophy is the same one. Okay. So like Ron Barron, do you know this guy? Okay. You can see for him, he actually applies bottom up. So, I mean, a lot of people are concerned about the market and things like that. I mean, we do look at the market here and there, but most importantly, we look at individual companies. Individual companies research up. That's why a lot of people ask how to find, right? I can share with you the reason why I'm very comfortable to work with Pete is because to me, he's really like the next Warren Buffett. But I'm not kidding in this. He's doing one thing that Warren Buffett is also doing on a consistent basis. Can you guess what is that? It is drinking Coca-Cola. No, I'm just kidding. Okay, he's doing something that Warren Buffett is doing really consistently, and he actually tells his family members and people around him, they know that he's doing that. Anybody knows? Warren Buffett is doing something very, 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 very powerful thing. He reads 500. Yes, correct. He's reading. He reads 500 pages a day. So meaning to say he reads maybe 2 books a day. Okay, so among the people that I know around me, right, Pete is the one that actually reads really a lot. And I don't know why he needs more brain power. For him,
I don't think I read as much.
I mean, I also read. So maybe we split out.
Yeah. I think 2 of us join together, maybe can hit 500 pages.
He never talk about the font size. Maybe he's quite old, then the font size is like 1 page, 1 word. I don't know. Okay, so you can see like the best investors, right? You go and look, Ron Barron, he actually invests in company using value-oriented approach. Here put growth company, but the whole idea is the same. Value-oriented purchase disciplines means that it must be undervalued. The valuation must make sense one. Don't go and chase after funny things and tell me that valuation doesn't matter. It cannot be that way. I think for the past 2 years, I've been scolding a lot of people, but because the market keep going up. After a while, I score until I look a bit stupid. It's like, correct, market go. It's like, but the valuation does matter, son. And he ignores short-term market fluctuation, okay? Because the fundamental reason for purchasing, right? You don't suddenly the price drop and then move away from it. This is something that it is very clear. It is, unfortunately, a lot of people cannot do it. This is, over the years, I also realized, teach so many people already, once market move, they cannot do it. Otherwise, if a lot of people have stick to what we have been teaching, right, I can tell you become millionaires already. So the reason why we say maybe we help to manage the fund is so that in case at least you still believe in it, you just know that individually you may not be as strong to execute it, right? We can actually help you execute this idea of value investing. Next investor, Frank Sense, same thing you can see. It's the same one. It's all about, okay, it's all about like stock prices reflecting earnings, the business fundamentals. Okay, so you talk about like really choosing like businesses that actually grow, and then this one is talking about same thing. Like you can look over and over again. They look at like financial characteristics, strong revenue growth. I can tell you, value investing or Buffettology is the way to go. Okay, so this is the whole idea. You all can go and check for yourself. Don't look for those very like short-term kind of investment that maybe they just become famous over 1 year or 2 years. Don't do that. Look at those that have philosophy over many years. Okay. So now, like these are some of the ideas that I personally have been telling people. Like I told people, hey, this like for example, this ETF is a lagging indicator. And what other people go and chase other things, over other things, right? If you all remember during COVID, like okay, let me give you an example of how I invest. So during COVID, right? Actually, in March the market dropped a lot. March, April. Then by May it shoot up a lot already. Do you all remember that? If you all remember that, can you help me type V? There's a V-shaped recovery, very sharp one. So March, April drop a lot, then May, boom, then June fly up already. Then around June, July, right? I actually told people about this particular ETF. I said hey, it's a lagging ETF. You know, not many people are interested. You can actually buy this. So there's a lot more advantage instead of chasing after certain stocks. Okay, so if you bought this, it probably would have almost nearly doubled. Okay, and there's many other examples. I won't go into many of them, but it has been proven you buy good business with good valuation. The valuation is the one that a lot of people are missing out. It will be okay one. So this is what I wanted to share with you guys. And the good news is because on board with us, we also have, okay, she's not part of the fund, but she advises us and she's also, I would say, always reminding us on really going back to the fundamentals, which is Mary Buffett. And the good news is this, do you all know that Mary Buffett owns a fund, which is called the UK Buffettology Fund? In fact, okay, the UK Buffettology Fund, right, it uses the same idea. Buy good businesses at good valuation. And guess what? This fund over the years, right, they actually sort of like even, okay, they here put the word beat the master. They win Warren Buffett by a lot. Reason being the fund is smaller. So guys, you know, when I talk about bringing you guys back to in time to go and buy Berkshire Hathaway, it's impossible already, right? So what we are hoping is to create something like that. Again, please, I want to emphasize, I'm not promising that we can turn 50,000 into 2.5 billion, but I'm actually, what I want to assure you is this. Number one, we eat our own cooking. So our own money is inside the fund. And number two, right, is this, the principles won't change. One. I mean, for those who have been following me long enough, you know that my principles of the value-based method doesn't change. I realized a lot of people started okay value-based investing, but when something more exciting come out, it changes. That's why it became, they didn't manage to get the results they wanted. So this is the idea so far. Okay, Mary Buffett is the godmother. Okay, so now, so when we talk about the, I just want to introduce you guys our fund name.
You want to change the name?
I'm okay to change the name lah. Okay lah, but so you want to change the name?
Truffle fund.
Okay lah, then I don't introduce the name already. Okay.
I can change now. I can change now.
The fund managers. Okay, so the fund manager is Pete, and also I'm the fund advisor where I will continue to actually look for truffles together with Pete and then build the wealth together. So I'll hand this portion over to Pete, and if you have got any questions regarding how we are managing the money, please continue to ask. Okay. So okay, yeah. Any questions? Continue to ask. I'll pass it this to Pete to talk about the fund.
Okay, thanks, Sean. Okay, so wow, this is damn exciting. Okay, so actually, before the event, right? Before we did the presentation, the fund was a different name, no? Okay, but never mind. Since the name truffle, okay, the previous name was actually this tree called wisteria. I don't know whether you heard before. I typed in the chat. Okay, so guys, do you all prefer wisteria or truffle? Okay. Type me in the chat, okay? Which one do you prefer? You prefer wisteria or truffle, okay? And why we at first chose a tree, right? Is because we realized wisteria is one of the largest tree with the deepest roots, right? So we really want to do that in terms of like how we build a portfolio. We want to build a portfolio with very strong roots, right? And yeah, like what Mark said previously, it was called the next level, but we realized that it doesn't really quite convey the whole idea behind value investing and buying strong companies and stuff like that. It is not intuitive, right? So we found this tree called wisteria that was very deep roots, very nice, and it's actually behind at the background. Okay, but I don't know. Just now after I talk about truffle, I think a lot of you all like the name, right? I don't know. Okay, so we call it truffle fun. Okay, but honestly, the fun name is not the most important thing. Okay, the most important thing is how we manage the money. That's the most important, right? We can call it anything. We can call it durian fund or whatever. Doesn't matter, right? Okay, the most important thing is how we manage it. Okay, so Derek say Mao Shan one better. Okay, okay. So the idea is we want to build a basket of AZOs, like I mentioned to you all just now. Okay, so I want to share with you all what we do, because some of you all have this idea that maybe we want to do the Paracupa strategy that Sean was doing. Okay, so firstly, we want to look for disruptive and resilient businesses that complement each other. So the barbell idea doesn't change. But one thing that why I want to bring on Sean on board, right, is to really give more emphasis and more focus on the finding great business, even greater business, the quality of it, and also the value investing side of it, to really look at fundamentals, right? I want to be very open here because I think some of you are my investors, right? Is that last year, I think one of the mistakes that I made, right, is that I didn't pay too strong an emphasis on valuation. I just want to say that, right? It is definitely a something that I want to improve on. And that's why during this period, right, when the prices are going very cheap, right, I want to immediately quickly find someone that I can partner with to make this fund even stronger. Okay, so some of you just now say, hey, can we do options? Can we do options? The answer is we can't do options. And we also don't want to do options as well. Why? Because this is a managed account. That means everybody has your own account and everybody has different portfolio size, right? The minimum is 50,000, can go all the way as high as you want. We have people with 6 digits, 7 digits. And therefore, if we do options, it is very hard for us to allocate, right? Imagine I do one option for, let's say, AZO for a small portfolio, right? Wow, you will oversize, right? You will over position size. So that's not what we want to do. Okay. So what we'll do here is just mainly stocks and shares and ETF, right? So we are also open towards ETF. Okay. All right. So once again, business ownership mindset, want to look at a 3 to 5 year horizon and really still remain very focused, right? Research focused. To answer Peter's question, hey, hi Peter, right? To answer Peter's question, right? It's the same fund. Okay, essentially it's the same fund. Now, why I bring on Sean is to give more emphasis on the value investing side of the house. And why now then when we do this call to action to people, say, hey, those of you who want to join the fund, right, is because now the market is very cheap. Okay, I just want to share very openly. We don't do this when the market is very high. We want to do this when the market is very cheap. Okay, and lastly, active management. For us to go and look for the truffle. Okay, we will find dirt 99% of the time. I just tell you all that first. Okay, not everything that we pick will shoot to the moon. No, definitely not. Not everything is an auto zone, but we still work hard to find as many auto zone as we can. Okay, so and I ask capital guaranteed. No. Okay, so if you are capital guaranteed, please do not invest with us. Okay, right? I have experienced investors who call me when the portfolio fluctuate like 10-15%. I think just now when Sean go through the best investors, right? I think one thing that maybe I can ask Sean to show just now is that when you look at their near-term performance, 1 to 2 year, can be very poor one. Short term can be very unpredictable. I just want to let you know first. Okay.
Yeah.
So
like the Ron Baron, the short term is 6 months is minus 20%.
Yeah, minus 20%.
Oh, the second one is minus 57%.
Yeah, exactly. Okay.
Yeah, but given 10 years is 20% per year.
Yeah. Right. So always want to look long term. Okay. So firstly, what we don't do in this portfolio is that we do not take short positions, right? Because we believe the market is inflationary by nature. So best not to bet against the market. It's very scary. Okay. Adrian is asking, based on Australia, can we join? I think can. Okay. We do not take speculative position. Definitely not. We have our own money inside as well. So we invest your money like ours. And more importantly, right, is we do not trade in and out very frequently, right? We spend more of our time researching, finding great companies than to just trade in and out, because that creates a lot of friction, a lot of cost for you guys. Okay, it doesn't make sense. Okay, just share with you all the details here. Okay, all investors can invest. not just accredited investors, retail investors also can, right? Minimum, we set it at 50K. Now, why 50K, right? It's because in the past, some people ask me, hey, Pete, you talk about AutoZone, why you never buy previously for the earlier investors? Is that because last time, right, the investment amount we put, right, was at 30K. So for a lot of investors, if I were to buy AutoZone, then they will buy one company, then they'll buy one stock, then it will oversize already, because back then it was already 1,008 USD. So it's easily 2,000 plus Sing already, right? So it will oversize. So I think that is not ideal. That's why we increase the minimum sum to 50K as well. Okay. Now ownership, you're not owning it through a derivative or structured program. No, it's direct ownership. You have ownership of the shares through Phillip Capital that I partner with. Okay. You can also have online access for your statement. One thing that we want to implement from here on, right, is a 3-year lock-in period. Now, guys, like Sean said before, is not to benefit us, but to benefit you. Why? Because we do see a small percentage of investors, right? When they first join us, right, they will tell them, hey, this is a long-term fund. We're looking at 3 to 5 years one. But when the market fluctuates 10, 15%, right, then they straight want to exit already. And guess what? Every time, I don't know why, investors tend to have this magic powder where they want to exit, right? It's always the worst time. It's always at the bottom. They exit already after the portfolio go up a bit. Okay, so to protect everyone and to make the investment journey smoother for everyone, is that it's a 3-year lock-in. Okay? Okay, keep the questions coming. Later on, I'll answer. We have Q&A also. Now, there are 2 types of account you can open. Okay, either you invest with cash, pure cash, or in fact, we can also invest your SRS. This is mainly for Singaporeans. And whoever works in Singapore, you may have SRS. So this is a supplementary retirement scheme. Okay, but cannot mix the two. You cannot say the half the portfolio, 25K cash, 25K SRS. Cannot mix. Okay, unfortunately, the government doesn't allow us to do that. Now, any sales charges? No, we do not have that. In fact, this is something that I emphasize to Philip that I will never do, right? It doesn't make sense that we haven't started investing our money, we take sales charge for what? Okay, right? But are there fees? I want to be very upfront. I think some of you just now asked about fees. Yes, there's the standard management fee and performance fee, and this has not changed since when we first started the fund. Okay, so management fee is over here. Now you can see that anything below 100K in Sing dollars worth, okay, will be 1.5% management fee. And below 1 million is 1%. And anything above 1 million, you get a preferred rate at 0.75. Now, how is the management fee? Deducted? Okay, it's not deducted once a year. It's deducted every month. So that if you top up at, let's say, 30th December, you will not be heavily penalized. Okay, so for example, I give you an example. Let's say you invest 50K. Okay, so it's 1.5%, right? Right. So the yearly fee is $750. Okay, so the cost to us to invest for you is $750, but divide by 12. So it will take $62.50 per month. That's it. Okay, $62.50 per month. Now, the next one is performance fee. Now, performance fee, I think some of you might be familiar, some of you might be not. I just explained very quickly. Is the percentage, right? Only when there are profits. So it's not the whole portfolio. It's only the profit. So for example, if let's say you start off at 100K at year 0, okay, then the first year, okay, it dropped to 90K, right? Then will there be performance fee or not? Guys, can you type it in, yes or no? Will there be performance fee? Yeah, there won't be performance fee, okay? Now, year 2, it goes to 110K, right? Okay, so in this case, guys, the performance fee, is it take 110 minus 90 or 110 minus 100? Okay, A or B, which one? Right, it's actually minus 100, the last highest point over here. Okay, so you can see over here, I say the year 2 performance fee is 15% of the profit. Okay, then let's say if it happens again, let's say it goes to 120 again, right? So we do not take the lower point, we take the last highest point, which is 110 over here. Okay, all right, so this is just to illustrate performance fee for you guys. Okay, performance fee for you guys. Okay, now I want to state very upfront which are the type of investors we're looking for, because, hey, by the way, I want to be very grateful. I want to say thanks to all those who have invested with us. You guys have given us tremendous trust, a lot of patience. There are some of you who ask us a lot of questions, but I think it's good. But there are some of you who are not suitable. So later I'll talk about who is not suitable. But let's talk about what is suitable first. Okay, is that investors looking for really mid to long-term growth, right? And You are not looking at, wow, next year must 50%, right? Or next year must 100%, right? I want to emphasize this very clearly. Short term, really, no one can predict one. Even the best investors, their portfolio may fluctuate in the short term. But one thing they are certain is about the long-term returns. If they do the correct things, the long-term return will come to them, right? So, and also to understand that volatility is not risk. So risk is when you don't understand what you're investing. You buy into companies that actually cannot last the test of time, right? You want to buy companies that maybe short-term can go up and down quite a lot, like maybe like AutoZone, they also fluctuate, right? But you know that if you give it more time, more people repair their car, right? Then it will get better and better and better. Okay. Third one is for really, I would say this one is the key thing. Like what Sean said earlier on, right? Is for people who want to invest, but let's say you don't have the time or you don't have the energy or you don't have the know-how, and just say, hey, let me get someone to do it for us. Okay. And we want to invest this in a very stable and long-term focused manner. We don't want to take people's money and anyhow invest and just like go and throw in the market. Okay. No, definitely not that. All right. Now, the next one is, of course, your investable amount is 50,000, right? I want to emphasize, please make sure this 50,000 is not something that you need in the short term also, right? Because we have the lock-in, and it's not that you cannot withdraw in the lock-in period, but there will be a penalty. So it's not good to withdraw. Okay, so make sure this amount of money, no matter is it 50K, 100K, or whatever, right? 1 million, right? Make sure it's not something that you need in the next 3 years at least. Minimally, 3 years at least. Okay. So do not FOMO and say, wow, let me throw in, then next year you need it to take out. Wow, it's going to be quite a tough experience. All right. Now, finally, I want to say who is not suitable. First and foremost, I do have clients who invested, and then after that say, hey, P, why you never do options, or why you never do those hedging strategies and stuff like that. So really, if you are looking at short term and you're more of like trading, right, then this may not be suitable for you. Okay. The second one is if you are someone that will panic during market drop, right? Okay. Right, if you see your portfolio drop by 15-20%, then you will really panic then really please do not join. We do not hedge the portfolio by like going short something. Okay, why? Because shorting, hedging comes with a cost. So we don't want to do that. We rather just take advantage of volatility and ride it through. That's the most important thing. Okay, and also for people who expect the fund to be positive all the time. Okay, I know this sounds silly, right? But really, there are investors who ask, hey Pete, how come the portfolio is not up all the time? I thought you implement the barbell strategy, it's like 100% all the time you will go up one. Hey guys, there's no such strategy, right? If the strategy allows you to stay hedged all the time, that means when the market goes up, right, you also don't get the gains, Okay, all right. So Kelvin, very funny. Kelvin's like saying CPF. Yes, if you want to go for something super safe, go for CPF. Actually, not too bad. I think 2.5%, but you know that your upside is also capped at 2.5. Although they give you 2.5 promise, but you also capped at 2.5%. Okay. Okay. I think there are a lot of questions. So what I'll do is I will just share the email first in case you all want to contact me. So take a screenshot now. Okay. The application link is here at investwithpete.co. Sean, so do you want to go into Q&A first, or do you want me to show them the steps first?
We can actually go into Q&A first. Actually, invest with Pete. Maybe we can give those who have nothing to ask and you're interested to actually invest, you can invest now. So you can actually go to the link.
Those would like
maybe we show them a bit like how to go to the link. Then later we'll go into the details. Then we'll record the thing.
Okay, can. Anyway, I'm recording the session already. Okay, so yes. I will share the screen. Okay, so I'll show you all the steps to apply. In fact, we recently have upgraded the process. Previously, it was a bit more troublesome. So if you go to investwithpete.co, right? Previously, it was called Wisteria, so I think we'll call it Truffle. Okay, okay. But if you come to the website, okay, but the official name won't change. Our official name is a number, but the number is very boring, so we give it a name. Okay. So you come to the website, you will see my face, right? Above, you can see home. If you want to find out more about the investment philosophy, you can come here and read, okay? But those who want to apply, you can come to how to apply, right? So the first thing is actually step 1 over here. You just click start here. It will actually bring you to another website to start to fill in the form, okay? And this is all electronically filled in, right? You can even sign it electronically so that I can receive at the end. So I'm just going to test it out. I'm just going to type address, email. So type in your name, your email address, Okay. All right. And you can click get started. Okay. So once you click get started, it will send you to fill in the form. All right. Now, guys, the form, the first part is actually a client suitability, right? Form is to know that whether you are suitable for the fund. Okay. So this is the form over here. So over here, you just fill in. For example, it will ask you things like what is your annual income. So I just anyhow fill in. Okay. How many years have you been in employment? Just type in the number that you are, your estimated net worth. All right. Your investing experience. Okay. Now, this is where it starts to assess your risk profile. Because this portfolio, right, while we tell them we are value-based, we choose good company, right? But because we are choosing stocks, okay, they still deem us as slightly high risk, okay? So I have some question here that I already helped you, that to qualify, you must select this number one, okay? So I leave it to what you all want to choose, okay? Because I cannot tell you what you must choose, okay? But over here, I'll just choose, okay, maybe 3 for question 1, question 2, all right, then question 3. Just go down the line, okay? Just fill in as the question asks you. Okay, just fill in the question, just fill in the tick. All right. Okay. Now, for example, there's one question like, what's the period to assess your success? If you choose the first one, then cannot already. Okay. You all cannot see. Can you all see? Sean can see,
I can see.
Oh, can. Okay. Yeah. Okay, so this one you choose 5.1, then cannot already. Okay, because they're very strict. MES is very strict. Okay, so you just tick along the way, right? Now, as you tick along the way, okay, so a few more questions. Total 12 questions. Okay, so once you tick along the way already, all right, then you can tick R3 and just sign here, right? So I will just sign like Pete Tan. Okay. Okay, so sign already. All right. Now, over here, this is for joint account. If you want to open with your spouse or whatnot, okay, then you fill in their name here. All right, then here you can sign again. Now, if you have signed before, you click again, it will just sign already. Okay, then you can key in your name, you can key in the date. Okay, then this is where you scroll down to the next one, but please read through. Please read through over here. Like, for example, how do I invest? What's the performance fee and things like that. Okay, then come down to here. Okay, so I think there's some question about what kind of stocks do we invest, right? We invest, we have global mandate. Basically, you can invest in anywhere, but we predominantly invest in US right now. And we're still also looking at China, because China now looks very cheap. Okay, in fact, I think Warren Buffett, China Munger, they all have been aggressively going there also. Okay, so once you read those, you can sign here, and then you just type in your name again, right? Then you can key in your IC number, right? Sean is what, 881, okay. Anyhow type, okay. Okay, so the date, then you just type in the date. Now, if you have a joint applicant, then you fill in this. Now, if you are filling a joint,
young children can or not? I think this one relevant to the joint applicant.
Okay,
is young children.
Those with children, depending on how young your children is, 18 is the minimum. 18, 1-8, okay. So if they are this year, 18 also can, even though the birthday can be December, okay. So then you ask your son sign here, okay. Right. Okay, but take note, those of you with joint applicant, you need to fill up this one already, then ask your son or daughter or your spouse to fill in one more, her own application form also, because it's joint, need 2 sets of form. Okay, so once this is done, this is very important. This is the W8 band form. This is to allow us to invest in US stocks. So please fill this up, okay? Please make sure you fill this up, all right? All the individual details, and then you sign, and then your name and everything, okay? Then just type in your full name, so don't just type Pete, okay? All right. Then this last one is for SRS. Now, I know I'm going through it once only, so later on, those of you who want more details, we're going to share with you the video, the recording after this, okay? Now, this is for those who are investing using SRS. You can fill in your SRS amount that you're going to invest. So let's say like, I don't know, 100K lah, okay? Right? And then what is your SRS bank? So maybe DBS, then you key in your SRS number. I'm just going to like anyhow type, okay? Right? You key in your SRS number over here. Then once again, sign again. Okay? Then the date, if you're happy with the date, okay, can. All right? So, okay, so done. All right. So once you have done everything, click in done, they will ask you, are you sure? Okay. Just click yes. It will process already. it will process already, right? Then it will actually send a copy to you and a copy to me. Now, please, at this moment, download the form, okay? Download this form, all right? So you can see there's a PDF format over here that you have filled in. After you download, click continue. Now, this is where it will send you to this page to really do the online application so that you don't have to come down to the office to fill in. All right, just now that one is assess whether you're suitable. This is the actual application. All right, so for those of you who are doing join, just listen up over here, right? Click on next. Now over here, the instruction is please make sure you click manage account if it's cash. If it's not cash, if it's SRS, click the last one, manage account SRS. Okay, by the way, just now in the form that you downloaded, okay, if you scroll all the way to the back, there are actually instructions here also. Okay, so if you forgot the instructions, don't worry, just come here. The instructions will tell you which one to select, either manage account or manage account SRS. Just choose one. Okay. Oh, you all cannot see my screen, right? Let me just share again.
Can see.
Oh, can see the whole thing.
You can see.
All right. So at the end of the
a few good questions. Yeah.
At the end of the PDF, there is this instruction to show you. Okay. So I'm just going to continue from here. I'm just going to choose SRS. Okay. All right. Now, this is where it's very convenient for Singaporeans and I think PRs as well. If you have SingPass, just click SingPass. Okay. But for joint account, once again, joint account applicants, please choose the fill-in form because both of you need to fill in. I cannot scan both your SingPass together. The government will come and look for me. Okay. So individuals, locals, PRs, if you have SingPass, use SingPass. If you do not, then choose the second one. That's it. Okay. All right. That I won't go through the details of it because it's just filling out form, very easy one. All right. So I will just pause here for a while, and I think we can go into the Q&A. Okay.
Yeah.
All right.
So later, if you all got any more questions about the filling out the form, later we'll send you all the video, okay?
Yeah.
And now I think there's quite a few good questions. So okay, first of all, okay, I go from bottom up because some of the questions are quite high up already. So the first
I
one,
come from the top.
you
go from the bottom, then we meet somewhere in the middle. Okay.
Okay. Then I'll answer the bottom first. So got people ask, is there any like WhatsApp group, Telegram group to join to continue to discuss? Actually, the answer is no. Now let me explain this to you. Now investing, if you all realize after a while, a lot of people actually know how to invest, but they get screwed up by people around them asking them questions to pressure them. So we don't want this kind of pressure, and that's why we want the lock-in period. We want you to not bother us. We want to invest for you. So I think we do our job a lot better when people don't advise us so much. I don't know whether you all understand what I'm talking about. If you all find that the matter is too arrogant and you feel that you want to discuss with us to invest, then this may not be for you because actually, by the way, we take reference this from Warren Buffett. He told his investors, after you put money in, lock in 3 years, don't ask me any questions, expect to see only one report a year, because he also understands. And the reason why he never moved to Wall Street and stay in Omaha is because he knows that he will be affected and he don't want to be pressured. He wants to make sure he invests correctly. So we are not going to actually put you guys together to discuss with you and answer your question. That's not the job. The job is to help you grow the money. So this is our main focus. Yeah. And
I think to take advice is good, but you must know where to take. That's why I'm very selective. I choose people that I know are good at investing. For example, Mary, for example, Sean. Because the thing is, these days you have way too much information as compared to no information. Right? There's too much information already. If you take in everything, right, you will just not know what to do. Okay. I think some of your DM me, so I'll just read out the question. KS is asking, will Sean be involved in the existing fund that some of you are already invested? The answer is yes. That's why I bring him on board as the advisor. But do take note that I'm still the portfolio manager, right? So I will still be involved in the day-to-day management. And Sean is my biological Bloomberg. The Bloomberg in person, right? Anything that I want him. So I share the main.
We discuss it together.
Yeah, discuss together. The main thing I want to bring in Sean, right, is to really help me to expand my research universe and also to check my back, right? Look out for my blind spots. What are the things that I may have missed out along the way in investing, right? I don't profess to be the perfect investor. I always want to make sure that there are a different set of eyes looking at it. That's why I bring on Sean. We also consult Mary on this. Okay.
Actually, frankly, so let me explain to you what's going to happen now. Basically, me and Pete, we're going to discuss, and then we are going to form a model portfolio. So we are going to say, okay, this is what the portfolio will look like. and then all your funds, right? Okay, because when you invest in this particular fund, all of you have an individual account. So once we create the model portfolio, like we say, okay, how many percent put into this particular stock, how many percent actually put as cash, we will create the model portfolio. And once we actually click enter, all your portfolio will model after this. So meaning to say existing portfolio or new portfolio, all of the portfolio will look the same one. You know what I'm talking about?
Yeah.
Okay, so when you're go and actually, okay, so someone asking, how do I get the money out, right? You can own sell, they can own sell withdraw, right? They don't even need to go through us.
They just need to send in a form to me. Yeah. You will
you're sending the form? Yeah. Hey, can they withdraw partial?
Can, but it's not advisable. It's not advisable lah. Yeah, because if you withdraw partial, let's say you invest 50K, then you withdraw partial, you below 50K already, then
no, must be minimum 50K lah, because we need the position size. Yeah.
Correct.
So if you invest, let's say 100K, then you take out 50K, then that one still can. So
still can. Yeah.
So what it means is we will sell away half of all the positions, and then the money will go back to you.
Correct.
This is how it goes. The one clear?
Yeah. And that's why this managed account works well for this, because usually in other pool fund, what happens is if one person, like let's say a very big investor withdraw, then everybody will get affected because the share price will drop when they sell massively. But this one, right, everybody have your own account. So if one person big account withdraw, right, it will not affect the rest.
So it's a very, it's called, sorry, what's this service called actually?
Managed accounts. Managed account.
Managed account. So your accounts are all your individual account. We have no access to your cash. Meaning to say, just to assure you guys, meaning to say we can't withdraw cash and then put in our bank on it. So the way the cash can only, so the account is yours. It's just that when you actually fill in the application, you actually allow this account, your account to mimic our portfolio. So that's the key thing. Alfred asked a very good question, so I want to answer this also. So if let's say they invest above 100K, and if let's say the market drop, then drop below 100K, then the management fee becomes 1.5%. Yes, accurate, right?
It's accurate. Okay, I want to let you know this is something that I've been quibbling with Philip Capital for almost a year already. Okay, but my power not strong enough yet. I'll do my best to fight even more, because honestly, the management fee to me, we don't get much on it. The management fee is really mostly to maintain the portfolio, to pay the back end and everything on. So okay, I can understand why they are not willing to drop it. But I can also see the logic of why you penalize me as investor, right? But I want to let you know it is what it is right now, right? Just to be very open. Yeah.
When will you exit and take position? Oh yeah, just like I mentioned already lah. So personally, if we can find a stock that will always grow, we try not to exit. Just let it grow forever. Yeah. Correct. So this is something that this is how actually millionaires and billionaires. I mean, it's okay lah. I guess it wouldn't be a very popular fund because most of the fund won't say things like that. But we want to tell you that based on our own experience and our own investing in our own fund and in trained by the best, like the Buffett family, this is how they operate. Okay, this is how we operate. Okay, let's see. Yeah. Okay. What other questions do they have? Is it a MAS regulated fund?
Philip is MAS regulated. Philip is MAS regulated.
Yeah. So it is regulated by MAS. The whole, I mean, it is under the license of Philips, which is whom is regulated by MAS.
Correct.
Okay, then they are able to see their own positions live, right? They can log in and see, right?
You can log into the online portal and see what I buy for you guys. There will be like a 1 day lag. So if I do it today, you will see it tomorrow.
Yeah, but we also will write
investor letter to you guys.
To investor letters to you guys. Okay.
Yeah.
Let's see. Is there a guaranteed ROI, expected ROI? Okay, this is the thing I have to share with you openly. We do not actually have an aim for a certain ROI. We aim to buy the best company at the best possible price and let the market do its job. Okay, so this is because I feel that again based on my own personal investing experience, right? When you aim for ROI, you tend to do very stupid things, especially when you cannot hit it. You feel that I cannot hit the ROI already. Then you feel very pressured to want to hit that thing. We do not want that. We want the best way to invest in the way that we really make the most logical decision. So if let's say there's no like that kind of additional pressure, right, it'll be a lot better. I know it sounds like we are very cannot take pressure. You're very weak, but I think for those who invest, you all know what we are talking about. It's actually the pressure that screws you up. It's not the knowledge. I can tell you that. You know, it's like I see some of my friends they invest, then they get like 15, 16%. Wow, then the investors scold them. So they try to hunt for more fanciful stuff. In the end, their whole portfolio go down. I saw before this kind of thing. So I mean, if you really expect a certain, so I just want to say this. We would love to invest for you and make you wealthy. But if your expectation is in a way that you feel that you need certain things from us to assure you all the time, and then we'll feel pressure to do that, right? Then it may not be the best partnership. It may not be the best working relationship. So it's okay.
Yeah.
Yeah.
I think Peter has a admin question. Can we create an individual account then add another person? The answer is cannot. Because especially if, let's say, you invest with SRS, right? You cannot add another person in because it's different name. But even with cash, the regulation is cannot. You need to open a separate account. But to expand on the question, can you open one cash account and one SRS account with the same name? The answer is yes. You can open two accounts if you want. Okay? But the minimum is still 50-50. It's not combined 50. Okay, it's still 50-50. 50K. Okay. All right. Let me see.
Will you advise on position sizing, portfolio sizing?
Okay. So
this portion, right? Yeah. You want to say?
I would say this is something that we also talked about in when we were creating the fund back then when I was discussing with Sean, right? Is that the philosophy is this lah. We want to be more diversified. Can you see here? The philosophy is we want to buy more than 15 companies over time, right? Because one thing is, regardless of our conviction, right? I think it's very irresponsible to when you are investing in other people's money, right? To be overly concentrated in just a few companies, right? Because diversification does help you to remove the risk of permanent capital loss, right? Because I just be very open. I think during the whole COVID period when there's a lot of YouTubers talking about Tesla, right? Well, a lot of people they went mad and they just like 80% into Tesla. Some of you are even 90% in Tesla, right? And I think now they are feeling the effects of it, right? So I think if you're managing your own money, you want to do it, I think is reasonable. It is within your own right. But I think as a fund manager, that is not something that I'm willing to do, right? So we are definitely going to make sure that we are not overly concentrated. Yeah. Okay.
Any other questions?
Sean, any other questions?
The lock-in period is 3 years. Actually, if I can,
you'll make it longer.
I'd rather lock in you all for 20 years. I mean, I know it sounds okay. Again, maybe in terms of promoting this fund or marketing this, again, it does not sound like the most like attractive fund because to sell the fund, we say, hey, you don't need to lock in, you can take it anytime, money in, money out. We can get a lot of money, and then it's just that we get a lot of investors with incorrect mindset. I mean, our main, I mean, we don't mind making money out of this. It's good to actually make money out of this as portfolio advisor, portfolio manager. But the thing is, I also want to create that kind of story where it's like, wow, these people become millionaires, billionaires because they invested with Pete and Sean with the truffle fund. Okay, I mean the name is okay for me. I think the name doesn't really matter, right? So this is something that I feel like the next 20, 30 years, I hope to achieve that So I really hope that people who I mean you feel that hey, there's a chance these guys can help you grow your money. I do hope that you just put the money there and then don't touch it. I mean, it's really for the purpose of really growing your wealth and compound it. This is what I aim for. Okay. So initially 50K, possible to add more fund. Answer is yes, right?
Yeah.
Right,
some of you are asking. Initially is 50K. Yeah. Some of you are asking, can you all top up later on? Let's say you add in 50K, then later on maybe add another 50K. Can. Once again, just let me know. I need to fill in the authorization form, simple stuff. You can add in anytime you want. But do let me know when you're gonna to add in as well, right? Murphy has a great question. Murphy's like saying, hey, what if Pete discontinue managing the fund for whatever reason? Let's say I want to go and retire already. Okay. No, the good thing is this. I don't see myself not investing until I pass on. You know why? Because there are very few professional sports in the world that you can play until 92 years old, like Warren Buffett and Charlie Munger, right? So I know I am not Charlie Munger or Warren Buffett, but I emulate. I want to be like them. Okay, I want to be like them. So yeah, I don't think I will not do it. The day I don't do it, probably you will see my face on the newspaper already. The obituary page already. Okay, but let's say touch wood. Let's say if something happen that I'm not managing the fund for some reason, right? Okay, the actually Philip Capital will let you know, and you have the right to withdraw everything. Okay, so it's not like, oh, you are locked in, then they throw you another advisor, then you're stuck with the advisor for another 3 years. No. You have the right to withdraw everything.
Oh, yeah. True.
Okay.
Truffle fund can beat SP 500 returns. This is what we aim for.
This is what we aim for.
If he promise you all this, if he promise you this, I mean, I think, frankly, I don't think it's that difficult to beat. I mean, actually, there are a few ideas to, you just take the S&P, the best, you just invest. Actually not, it's not that difficult one. Okay, but we, again, in the long run, given time, I'm not saying like every year beat. Buffett also never beat every year, okay? So, let's see.
Yeah, okay, Adrian is asking, sorry, you go ahead.
Yeah. Will we get to know what the fund is investing in? Yeah, you can actually log in and see exactly what the stock is.
Yeah, so there is
like every day you can go
online,
and see.
There's an online portal you can go and see every day if you want. Okay. Yeah. Adrian is asking, only Pete invest or got a team of investor like Buffett? What do you mean? Okay, but maybe if I interpret the question in my way, is that ultimately the decision making part, right? The one to click is still the PM's job, is still the portfolio manager job, right? So I'll be the one doing it. But the main reason I bring on Sean and also have Mary to really is to think through deeper, right? Is to think through like, hey, what are the companies that we can look at and really research more, right? So while I'm the one doing the clicking, but actually there are more brains behind the finger now. Okay.
Okay, so good question. Someone asked the past 5 years annual average return. Okay, I just joined the fund today, you see. So it's like I mean, my hope is this is like a Berkshire when it's $200 lah. So there's no records lah, because I literally just joined today.
Yeah.
Then after from today onwards, then we can track lor. So it's just like same thing, like Berkshire.
I think for those of you who are already invested, the last 2 years, I must say, we didn't outperform the market. I want to be very, very honest, right? We didn't outperform the market. But am I worried as a portfolio manager? The answer is I'm not, because I'm very certain of the methods, right? And I'm bringing Sean to strengthen it even further. So going forward, do expect some changes to the holdings in the portfolio, right? Sean is going to question me a lot on a lot of things, right? We're going to have a very rigorous discussion. Okay, but we will fight. But do expect some changes. But to me, I feel that it is only right that I keep exploring possibilities to make sure that I get the best investing mind that I can to join the fund, right? To make sure that it is the best fund possible. Okay, if I can go Warren Buffett, I'll do it lah. But I think a bit expensive. Okay. Okay. So do you have stock analysts? Do you release stock analyst report? We don't really release the report lah. It's like we don't release the report.
But we do have to write a report to Philip's chief investment officer before. So actually, there's a few safeguards one. There's
we need to justify for him lah.
Yeah. So we need to write report to show him before he allows us to invest in particular stocks. Okay. So any other questions? Okay. If no question, actually, the email is there.
Yeah, the email is here. If you all have any other questions, do email us here. If not, once again, the link to apply is here, investwithpete.co. I will go and change the website fund name later on.
What is PMA and PPE? Do you know?
Actually, I don't know PPE. PMA is personal. PMA
managed account, is it?
Managed accounts personal managed accounts I think.
Basically, this is personal managed accounts, right?
Yep. Correct. This is actually personal managed account. Yep.
Currently I only invest 100K but I'll put in more. Yeah. Philip's managed account.
Philip's managed account. Okay, yeah, correct.
So this is Philip's managed account, yeah.
Yeah.
So so right now, the whole idea is like what Pete mentioned. We are pitching this particular fund at this particular point in time, because this is quite a good time lah. So there are certain times it's a little bit harder to enter. Now there's a lot more discount and a lot more easier to manage your portfolio and then craft it into place. Hopefully, I mean, this is the goal lah. We just position size your portfolio and then leave it there and then let it grow. And then we earn money as you earn money, So we want to be as lazy as possible. I mean, lazy as possible. Frankly speaking, is really I don't want to touch the portfolio much, as in like keep changing each and there. Do one solid one, set it up, and then let it run. This is really how the strong value-based investors really do it. Keep changing the portfolio is a sign of like a little bit maybe being affected by the market or being affected by other people already, being pressured. You know, so you don't see Buffett keep changing here and there.
Yeah.
Yep.
Okay.
Yep.
I think there's some question where people PM me. Hey, don't PM me. Just put in the main chat so everyone can see your question, right? Okay. Some of you say I already have an account with Philip. Do I need to open a new one? The answer is yes. Right. This will be a separate account with your trading account. You cannot merge your trading account with this. Okay. Adrian is asking how many stocks from a basket for 50K. So we are looking at about 15 stocks.
15.
Yeah. But
the
we will not straight away
50K,
get,
yeah.
But we won't straight away hit 15. If we don't find 15
Yeah.
good ones, we won't just force ourselves to buy. That's what I want to say.
Yeah. Give us some time to build up the whole entire portfolio, right? It's not like suddenly next month the whole portfolio changes. Because like that is like if you do that, means that either it's a very good bargain. Actually now maybe have that chance. Maybe this few
maybe we can find a
chance,
15. This couple of months. Yeah.
Actually high chance. This few months. Really got a very good bargain.
Anna is asking, can we transfer the current portfolio from TD Ameritrade to Philip? Cannot. Yeah, not linked. They are not linked. Okay, so not able to lah. All right.
You all will get like an investor's letter minimally once a year. Once a year. But I mean, we don't expect ourselves to like keep changing a lot of strategy, or we'll give you some updates. Okay?
Yeah.
Because someone asked, is truffle strategy only can do when joining the fund? There's truffle strategy. This is something new today. So I mean, just now we show you. Yeah, this was just
it was a story that I want to use to how to say to describe my process, but I don't expect the name to catch on. So okay.
Yes. Correct. So some of your portfolio, right, initially, right, you'll be in cash, won't be overnight suddenly become stocks. So the whole idea is this. The whole idea is again, we become your portfolio manager, your money manager, where we actually look at how to best allocate the 50K. Now, if you can allocate 50K, meaning to say if it's 500K, 100,000K, it's still the same, because we have to okay, so that's why if it's too low, if let's say you only give us 10K or 20K, right, it's very hard to divide into 15 stocks, and some stocks already very like 3,000, 2,000, and it's very hard to divide already. That's the reason why we come out to some 50K. I know again, it creates maybe a hurdle, then the fund becomes smaller. But again, we want to do the best that we can to grow the fund, not so much of get as much money in as possible. So after already, but when Pete first started actually creating a fund, right, the intention never changed. So I also want to say that for those who actually put in the money some time back, and then the whole portfolio is down now, and if you feel very upset now, right, I want to say that then maybe you should not continue to invest, because seriously, everybody's fund is down, like even Buffett one also down for the past like 6 months. So it is very, very common one. And I again, if you all ask, hey, what's the fund down, and you feel like unjust and stuff like that, right? I want to say that again, number one, we will never want to be put in the position that we are pressured to do stupid things to the portfolio to make it look nice. We want to make sure given time it will grow. Again, the goal is for you guys to become like, wow, I became a millionaire, multi-millionaire, billionaire because I make this decision. This is the whole entire vision of it. Okay, this is a vision. And this vision, right, is given, it's across time, and these principles of investing can never change one. So therefore, the pressure from investors and all that, it is something that I would choose not to have, because if I have, then I cannot invest properly. I mean, together with Pete. So I also want to, I think it's good that we have two people, so that if people email us and then scold us, I mean, frankly, we will feel affected. I won't say, you see, we all look very hard, but we are soft guys who actually, we also like feel like, wow, people also don't trust us. Will you feel affected? Will you make the wrong bad mistakes? Then there may be the chance, but we will actually minimize it through really exchanging ideas and making sure that we don't fall into that. So I'm glad. Actually, Pete is an investor that I really trust a lot. So even though like he said that he never looked at valuation and all that, but so far I've been investing with him for years already. He does consider quite a lot of things. It will never be perfect. Okay. So what we want to say is we can't guarantee anything. We cannot expect any returns, but the whole entire goal is to make this fund $1 million fund. I mean, your whatever fund that your individual account, $1 million fund, given time. Okay.
Yeah.
Pete is a very good investor. You all know what?
The objective is to get rich together.
Yeah.
The objective is to get
rich together.
Yeah.
He very rich already. Get richer is to help.
Richer.
Also.
You also very rich.
Need to put inside.
Minimally.
Okay,
minimally is 3 years, but I would say if you can leave it there as long as possible, really.
Yeah.
Right. Yeah. I just checked.
SRS accounting.
Where's your SRS account question? Raymond, maybe you want to post again.
Can withdraw SRS amount? You will go back to your SRS.
You go back to SRS?
You cannot.
You withdraw SRS from the account, it will not go to your bank. Okay, don't.
They're trying to find a loophole.
This is not a loophole. Okay. Okay. Yeah, so I think Adrian is asking if we're not investing, will the cash be kept in reserve? Yes, the cash will be kept in what we call a money market fund. We will at least earn the like 1% a year, but that one is not important. You know, the whole idea is we it's like Warren Buffett. He has the ability to sit on his butt, right? And hold on to, I think what, $160 billion for so long, you know, how many donkey years until this year he decided to deploy. So that's why we see this year as a very critical year as well. Yeah.
That's right. If you invest in tranches, does a 3-year period apply to each tranche progressively? The answer is yes.
Yes, the answer is yes. Yes, correct.
Will all portfolio be same for all investors, regardless how much money they invest? Oh, yes. Answer
yes.
We don't customize the portfolio for you. We actually invest as if how we'll invest our money and then you'll all follow our portfolio. Right. That's the thing.
Yeah. Okay. The percentage of fund to be allocated, I would say there is no specific fund percentage, but like I said before, position sizing is key. We will not allocate like everything or like concentrate into like 3-4 companies. To us, at least 15 companies, minimally a 15 company. So you do the percentage from there, 100 divided by 15, around there. Okay.
Okay. Laura's asking how much have you two invested? At least 6 figures for now.
Yeah, at least 6 figures. Yeah. I just share very openly. I have like 400K in there. Okay. Right. D Ho is asking any admin support to create SRS. Okay, so you can email to me. If you still need help in the SRS. Oh no, you're talking about setting our SRS bank account. Okay, very simple. Just call whatever bank you want. DBS, OCBC, or UOB. Can already. Okay. Cecilia asks each top up must be minimum 50K. Okay, don't need. So the initial is 50, but subsequent top up the minimum is 20. 20 or 25. Okay, let me confirm that. I think it's 20. Okay, then I let you know. Okay. So yes. E is asking, can we do options? No, we only do shares. Okay, only shares and ETF. ETF is considered shares as well. Correct.
So actually just to share with you thing because because the fund doesn't allow us to do option, but we are also exploring certain ETFs that uses option for certain kind of sector that we want.
Yep. We are still researching whether is it safe to do it. Okay. Ming2 is asking who's the custodian. You it's not me. Okay. If you talk about technicalities, it's Phillip Capital, but it's under whose name within Phillip Capital is you. You will see that the account is your name. It's not Pete and Sean. Like Sean said, we cannot take your money and go and put in our account. Okay. Anna is asking, can we sign up anytime? Yeah, I mean, technically you can sign up later on, but why we want to do it now is that, okay, guys, be very, very frank. Do I want to be in the account opening mode every time to help people open an account? The answer is no. Right? I want to open the account already, right? Then I focus on the investing side of it. So usually we do like a period of account opening, allow new investors, but then after we close already. Okay. So just to let you all know. Do we need to pay for custodian? No need. There's no custodian fee in this case. All right. Mark is asking what's the time horizon. We're looking at minimum 3 years once again. That's why the lock-in period is 3 years. Okay.
30 years.
30 years. Okay.
I mean, seriously.
No, I don't think Phillip Capital will allow me to do that. I think the MES will come.
I mean, we don't lock in, but your horizon, our horizon is 30 years.
Yes, our horizon is is long.
More than that.
Is as long as we can. Okay.
Yeah. Okay. Okay. So I do hope we have answered your question. If you're interested and then you think that maybe certain portion of my fund can pass to these guys and then see how it goes. And one day I will appear and say, I can actually also make it because of these guys. I mean, this is what we aim for again. So I do hope we have answered most of the questions. And the 30 years to compound. Compound. So okay, I mean, even if you don't invest with us, please do look at the perspective of 30 years. The advantage of having us is I mean, now we are professional money managers. So with that profession in mind, you become less prone to doing like stupid things. When it's your own money, sometimes you do very stupid things. You can withdraw the profit every year. So there are some investors, their strategy is to actually like, I mean, this one again, I cannot say any projection of returns. But let's say if it grows at 15%, you can actually take 5% every year as profits and then let the thing continue to grow. This they call it the drawdown strategy as for retirement fund. But this one let it grow for a while first. 5 years, 10 years first, okay, or 30 years, okay. Depends on your age, okay. Depends on your age. I know we are all very young, but I do hope that hope that one day can hit the multi-million billion mark. Okay, can
Mm,
So okay, if your fund disease SRS, yeah, can you use the SRS one? If the fund disease is basically you must do your legacy planning, correct?
Is
You must do
estate
your
planning, nothing to do with me.
Yeah,
The corp will take over. Yeah, okay.
Yeah,
I think a lot of you all have like the very specific questions already, right? So just write into this email. I will look at the questions and then I'll reply you guys accordingly lah. Oh, okay. So for example, like the disease one, it's out of our hands. The law will take over. Whatever estate law is in Singapore now will take over. Okay.
but they open a joint account, then okay lor.
If you
So
open your
there's
account, then it's okay lah. So that is one possibility you can look at. Yeah. Okay.
So Pete and Sean, we have the CMS. We passed the exams. We passed the exams, and Pete is actually
So I want to say there's
he has a license. Yeah.
Correct. So to be very clear and specific is that the license holder is Phillip Capital, right? There's no fund manager in Singapore will tell you that I am personally licensed under MAS, because that is not how it works, right? So the license is held by Phillip. So just to be very clear about that, okay? So yeah, so anything that we do, actually we have to go through Phillip Capital as a process lah, right? So that's why we also find the most senior and reliable brokerage house in Singapore, which is Phillip Capital. Okay, so Anna is saying what happened if I leave Phillip. Once again, if I ever leave Phillip, then you all can choose to withdraw the money. Okay.
But you don't understand something. I mean, the whole entire structure is Phillip give us the ability to help to provide this service, but they didn't really employ us in any way. In a sense, we are like more like a partnership. I mean, okay, structurally and legally, you're sort of employed under Phillip, is it?
We are basically licensed under them. That's it. We are not employee
licensed under them,
or anything. Yeah.
So there's no reason like why he angry with the Phillip people and then leave lah. so they allow us to actually have the license to do this. Okay. So yeah, I mean, but in case, definitely we'll update you guys if let's say there's any changes. Which again, probably that particular manpower movement will be in 30 years, 40 years time. You're much younger than me, right? 50 years time. Okay, Ken?
Yeah. Okay. All right. So guys, hope you all learn a lot, even if you all are not joining the fund. I hope you all understand the so-called newfound strategy called truffle strategy. Okay, but this is just a fancy name. Really, the ultimate thing is it is value investing. Really very going back to the roots of Buffettology, right? How to invest looking at great companies and great price. Like what Sean said, it's very simple one, right? It's very simple things. Okay. All right, so yeah, so that's all the time we have. Okay, but almost hitting 1 hour, so I don't want to drag you all any further.
2 hours.
Yeah, almost 2 hours already. Okay, all right. Okay, so any other questions? Do just email me over here. I do have someone to look at the emails, so I will reply them personally after they filter as well. Right, for those of you who want to apply, just go straight to this website over here. And if you have issues in terms of the application, you're not quite sure, you can also email me over here as well. Okay, all right. So Sean, anything else, or that's all right?
Yep, that's all. So again, this one is really sharing of this how you manage the money, and also a few things to actually summarize before we end the whole thing. Number one, the Buffettology way, the truffle fund way is actually the Buffettology way, which is to buy good businesses, a portfolio and a basket of them at an undervalued price. And with the mechanism, right, we have an advantage in the stock market already. And this particular way, right, has been proven to grow for investors for years and years and years. Not every single month, every single year, it will be positive, but you give it time, right? If you look at the 5 years, 10 years, or even 15, 20 years time period, right, they have been growing at a like 18%, 20% rate. Now, in case you all think that it's very little, right, when you compound it, it becomes very powerful. That's how the first person that I show you guys, the investor, he invested in Berkshire, and over time, he became a billionaire just by making this correct decision. Now, the second thing that I want to emphasize is this. The second thing I want to emphasize is the reason why we're actually doing a call for like fund now. Someone asking when will we close the fundraising? Now, you must understand the fundraising thing, right? It is your individual account. So we are actually asking individual investors to put money into your own account and allow us to use your account, or allow your fund, right, to mimic our fund. There's the whole thing only. So there isn't really like a time we need to close the account, because I mean there's no logic to it. You know what I'm saying? It is really your account. You want to put in like 5 million, 10 million, that's fine also. It's just that your 5 million, 10 million will mimic the way that we actually create our own account with real money. So this is the thing. Then and why are we talking about the fund right now? Is because now is really a good time. So probably maybe if the market goes up, we don't know the market will go up or down. We don't predict the market. If the market goes up, definitely if it's very high, like overvalue or maybe like of good value, there's no like strong value, right? Probably we also want to ask for like call for people to invest, because it's not easy to invest when the market is high. It's actually a lot easier when the market is low. Okay. Yep. So this is what I want to share with you guys. Then finally, if you've got any question or if you are keen to actually invest, you can click on this particular link that I'm going to put inside the Zoom. You can click and then you open the account first. After you open the account, remember the account is yours. It belongs to you. You have access to actually see exactly what's in the account. You can close the account anytime and take the money out anytime. Okay. It is just some paperwork. Okay. So this is the place that you can actually open. And then once you open, we will give you a confirmation. Then that's where you can actually consider putting in the fund. We will communicate with you once you actually open the account on more details. And also like any investors letters, any updates, any other like communication on things. Okay, Ken? So thanks a lot, guys.
Thank you so much for coming this session. I will just also share the recording later on. I'll just put it on my YouTube channel, then I can share with you guys as well. Okay, if you want to revisit any part of the value investing sharing that we did earlier on. Okay. Yeah, we will email you now. We'll email you the link also. Okay, once I get the link. Yep. Okay, thanks. See you guys. Okay, thank you everyone. See you soon. Bye. Bye.